Hello traders, I have something absolutely wild to show you. So typically a lot of people start videos with saying everything you know about trading is wrong. I feel like this is one of the only videos where 100% I can show you that everything you know about traditional trading in markets is completely wrong. And what people are telling you is generally the absolute opposite of what you should actually be doing. Before I go into that by looking at a bunch of really cool statistics that are going to be available for you for free, just with one click of a button, super easy on TradingView. My private Discord is popping off right now. I do live trading. I post private alpha that I would never release publicly. If this sounds remotely interesting to you, you can click the link in the description below. And we currently are doing this only for $15 a month. So if you want more alpha, if you want to talk to me, if you want to watch me trade these things live, consider subscribing. With that being said, let's get into the video. So when I say everything you know about trading is wrong, with this video, I really mean it. So what are we looking at here? Let's minimize this and simplify this. These are candlestick pattern statistics, and we're going to be looking at these on different time frames. This is Bitcoin on the 1 hour time frame. Did you know that of the last, I don't know how many sessions this is, but I think this is a few thousand, if not more. This is looking at a bunch of past data. There were 154 bullish engulfing patterns. For those that don't know, a bullish engulfing pattern is seen as very, very bullish. Typically, when a candle that looks like this envelops a red candle, price tends to go up, something like that. That's what people are traditionally told. But look at this statistic. 43.5% of the time, price did not even go higher. Price did not close higher. No. That means that 57% of the time, price actually went lower. Now you might think, okay, well that's just a fluke. Maybe bullish engulfing patterns, maybe stuff like this is actually, not that bullish. Actually, it gets even scarier or even better if you're watching this video. I mean, of the 174 bearish engulfing patterns on the 1 hour time frame of Bitcoin, 58% of the time price just went higher. Look at that. So this is the percent of the time that the next candlestick is going to be higher than the previous candlestick. Typically on a bearish engulfing candle, price just keeps going lower. That's kind of what a bearish engulfing candle is. It's that candle right there where price just, engulfs the previous bullish candle and price goes lower. But no, price does not go lower. 58% of the time, price actually went higher. If you look at the other bearish patterns, there are some bearish here that a lot of the time price just ends up going higher on bearish patterns, and price can sometimes even just go lower on these bullish patterns. Now you might say, well, maybe this is just the 1 hour time frame. Go at a higher time frame, go at a lower time frame. It doesn't change much. These patterns are, this isn't that much data because this is the daily time frame is not going to have as much data as you can see here. But if we look at our statistics chart, again, you can see, this is just not a lot of data though. Let me actually just do this so that we can get every single candlestick known to man. Here we go. So here you can see that there's barely any edge. A lot of the time price will go a little bit higher, but also price goes higher at bearish engulfing anyway. On this one, which is seen as pretty bullish, price just goes lower. On this one, which is seen as pretty bearish typically, price just goes higher 75% of the time on a tweezer top. A tweezer top is this. This is seen as very bearish. A tweezer top candlestick patterns when there's a green candle and then there's the same high and then we get kind of something like a bearish engulfing. Nope, typically price just goes higher. Now on the micro time frame, on the 1 minute time frame, what ends up happening with these patterns? With this, I should probably change this to 1.5 so I get more picky. That means that I'm only looking at candlesticks that had 1.5x the average volume. Okay? Insane. Almost 60% of the time on a bearish engulfing 1 minute candle of Bitcoin, price ends up going higher. What? Across time frame, these candlesticks are showing you that the articles, the traditional literature, everything's wrong. It's all wrong. Because if you look at statistically what ends up happening, typically when a very bearish pattern occurs, price actually just goes higher. When a very bullish pattern occurs, price just ends up going lower. 46.4% of the time, price went lower after a bullish engulfing pattern, and 59% of the time, price just went higher after a bearish engulfing pattern. Now, if we were to look at just some of these engulfing patterns before moving on, let's go look at a few of them here. It's like super, yeah. Oh, here we go. So that was a bullish engulfing pattern right there. Do you guys see this high volume bullish engulfing pattern right there? That's one right there. Typically, that's seen as a very bullish thing. Nope. Price just went down right after that. It's just like sometimes it's just these patterns are just so I mean, really, like things just happen the opposite and these statistics just kind of show it. Even neutral patterns. Did you know that only 24% of the time price went higher after a doji formed? A doji is an indecision candle. It's when price goes sideways. Typically, when price goes sideways, this is actually showing me that price tends to go lower. Price tends to actually go lower when you get a pattern like that. We're getting all these really, really cool statistics on this. But what I also want to show you is it's not just Bitcoin. It's other cryptocurrencies as well. When I looked at Pepe on the 1 minute, I found something pretty similar. Oh, let me change this to 1.01. I think that's what I had last time. That gets me every single candlestick, regardless of volume. Yeah, I mean, just 50% of the time, 50-50 means nothing. As what even knows that? 50-50 means just nothing. And the majority of the time that there was a bearish engulfing on Pepe, price just went higher. Did not matter. Piercing patterns. Oh, that was one that was listed number 2, I think. Yeah, piercing pattern. So a piercing pattern is like that. It's when price goes down and then the next candle pierces the midpoint. You see that? That's seen as very bullish. Nope. Only 25% of the time did price keep going higher. Only 25%. Yeah. And dark cloud cover, which is a very bad bearish pattern that I'm going to show you guys right now. Dark cloud cover, when you see this kind of thing where there's a red candle that closes below the 50% point of the previous bullish candle, did you know that only 30% of the time did price go higher? Oh, actually, that's quite bearish. So I guess that one was a little bit more bearish. But yeah, as you can see, Pepe, it doesn't matter the coin. Yeah, look at this. Only 38% of the time did price keep going higher on a bullish engulfing, and 60% of the time price just went higher on a bearish engulfing. On the 5 minute, I mean, these candlestick patterns are they're not random. They're actively trading against you. It's like that these patterns are setting up just so that they can catch you buying or selling at a terrible price. Okay? On the 1 hour, it's not going to be that different. I mean, well, this actually just isn't enough data. I would have to change this to something different. Okay, one more thing I do want to show. So I've been showing frequency, but not the amount that price would actually, price has actually changed. So let's go look at the P&L. So what you're going to be looking at here is instead of a percentage, it's going to pop up a P&L. If you can see right here, this is super, super interesting. This is saying that if you were to buy every single time after a bullish engulfing pattern has occurred, you'd be down 0.6% if you are on 1x leverage. If you were to short on 28 bearish engulfing candles, you'd be down 0.42%, because that means that price typically goes up after a bearish engulfing, price typically goes down after a bullish engulfing. If we look at these other statistics, I mean, these are really small sample sizes. You should only really be looking at ones that have a very large sample size. So you can see here, there's no like P&L there. These are 5 candlesticks after. If I was to do just like 3 candlesticks after, how profitable would you be? It's going to load that. You can see here, you would be down 0.42% right there. You'd be down a bunch right here on Bitcoin in the 1 hour. If I go to the 1 minute, if you wanted to trade candlestick patterns in the 1 minute time frame, your best bet would be to just do the opposite, basically. As you can see, there's just not any edge in any of these really candlesticks. How about what if I do this to I'll do this to 5. Yeah, it looks like really candlestick patterns don't work, but they don't work at all in the fact that you could actually trade against them and you'd make money. You can see with all these negative P&Ls right here. I mean, yeah. So I just wanted to make this video because I thought that this was so cool that you can look at statistics of these patterns and really find that, I mean, more often than not, price goes down on very bullish patterns and price goes up on very bearish patterns when you look at what the patterns actually are. I mean, 240 of these long lower shadow formations, and only 48.75% of the time prices actually went up. Majority of the time prices went down. Okay. And, it's inverse here. of 118 shooting stars, absolutely didn't mean anything. It was just a 50-50 frequency. It just doesn't really mean much. When there were 3 bearish candlesticks in a row, majority of the time prices went up. And as you know, dojis are typically bearish, more bearish than they seem. So this is a really cool indicator, and it really showed me a lot of the fact that a lot of traditional literature are like, oh, you know, these are bullish patterns, these are bearish patterns. Honestly, no. If you were to do the opposite of these patterns, you would make money. And that's kind of a sick thing, but it's just how I think it's just the way that markets run now. They look at traditional literature, not they, but just markets. Traditional literature will just make you buy tops and sell bottoms. It's just not a good way to trade. And I think a much better way to trade is trading psychology. And part of trading psychology is counter trading what most people are doing. Like, this seems bullish, it's not. You know, of 150 hammers, the majority of the time price didn't even rise. It's insane. I mean, on the 1 second time frame, I haven't looked at this. I want to close the video with something kind of insane. The 1 second time frame might be too much because that's just, I mean, that's very, very short term. I don't even know if it's going to allow me to look at that. But I wonder what the statistics are on the 1 second. But I feel like that those statistics would be kind of skewed by just random market orders, whereas the 1 minute might not be. But yeah, oh yeah, it's not going to load on the 1 second. Maybe on the 30 second. On the 30 second, it probably will. Yeah. So, oh my God, even scarier. On the 30-second time frame of many bullish engulfing patterns, price just goes lower. Piercing patterns, price just goes lower. Bearish patterns, price goes higher. Look at this, next session higher close. Price goes higher on the bearish, price goes lower on the bullish. It's hilarious. Whenever there's a hammer, only 36% of the time price goes higher. Almost 2/3 of the time, an inverted hammer leads to price just keep going lower. Price just keeps going lower. When you see this pattern, it's seen as bullish. No, typically price just keeps going lower. So interesting. I love looking at stuff like this. I'm going to share with you guys these patterns and these statistics. It's really, really cool. It will give you a substantial edge because then you can start to believe that these patterns aren't really what they look like. They're really traps for a lot of traders. So with that, you just learned a lot. Happy trading, and go look at some statistics instead of just relying on your emotions. See you guys in the next one. Bye-bye.